Okay, so we're here today with Kevin Huynh, the owner of Empire Mortgage Group, also one of the brokers on the team.
Awesome.
Kevin, how's it going?
Good, man. How are you? Thanks for having me.
Doing fantastic. So we're just going to start off a quick introduction about yourself.
Cool.
Let's figure out your background, your experience,
Sweet.
and how you started this team.
Awesome. Thanks for having me, Doug. So I am the owner and principal broker of Empire Mortgage Group. We've been doing this for about 13 years now. I've been broking for 13 years. We launched Empire Mortgage Group about 2.5 years ago. And we've been growing ever since, helping Canadians with their financing through residential and commercial property. So we're growing at a rapid pace. We're pivoting with all the rule changes and policy changes, and love what I do, man. So,
Perfect. So you actually helped me get a mortgage a few years ago, and I actually stumbled upon this little piece of.
Here you go.
This was an old Kevin Huynh.
Oh yeah.
Perfection. Look at that guy right
Look
there.
at that, eh? I mean, you got a picture of that in there. Can you get in there somewhere? Boy, not a single gray hair.
Not a single gray hair on that
right
guy.
Here, Doug, it's funny story about this is that this is for a Spectator article.
Oh yeah?
And I was so proud. My mom was so proud. I was living at home, and that was my dad's suit, 3-piece. Driving my dad's car, just
Awesome.
like faking it. We went up and down the street 4 times to find the nicest house down there, and this was the North End. And at that time, this was the nicest house on the block. So, man, what a cute little kid.
Right? It looks like you were going out door knocking that day.
We're probably were, man. Came a long way since then, right? So, yeah.
Anyway,
it's funny you found that.
Yeah, I found that little gem, so that's
Awesome.
pretty good.
It is funny.
Okay, so I guess the question I have for you then is, how do you and the team keep up with changes and the developments in the mortgage industry, and where do you get those resources for them?
Great question, Doug. Yeah, it's tough. It's tough. That's why when we see part-time brokers, we're like, it's hard to do it full-time. So like, how do you even do it part-time, right? So we stay on top of the markets. Like there's news feeds that we constantly track on a daily basis, sometimes hourly basis, depending on like Wake Up Canada announcements or OSFI policy changes and whatnot, right? So we try to attend every single conference, not only in Ontario but in Canada, and then we always try to go to certain real estate events and financing events in the U.S. as well, because their bond yields are in correlation with our bond yields and thus our interest rates, right? So we have a team of 7 operation members on our team. And we're constantly on it, and we have a group chat that we're constantly sharing news articles and stories, right? You gotta be on top of it. I see mortgage professionals, real estate professionals out there that really put out content all the time, but becomes irrelevant very quickly. So for us, it's like, our job is to be the professional. That's one of our core values, to give our audience, to give our clients, our friends, our partners, our family, reliable information. So it's constant work, man. It's a lot of work, but we love it. We enjoy it.
Oh, that's good. When you guys go to conferences, what's your main takeaways from those conferences? Like, is it networking?
Yeah.
Is it
Great question, man. Like networking is huge. More like successful mortgage brokers tend to stick together, not battle against one another. So we try to stick it together and see how we can grow together. A lot of government changes, lender changes, insurer changes, to see what's going on the markets, not only in Ontario, but like West Coast, East Coast, nationwide. And just building amazing lender relationships is huge for us. We've always done it the right way. And because if we can establish amazing lender relationships, that would pass on to our clients. Because if we need a rush approval, if we need a deal to kind of look after right away, we can leverage on those relationships that we've built before. So yeah, a combination of things, right?
Yep. And your guys' team has always been a genuine team, and it's always been such an approachable team that, for me, like when you guys reach out to other mortgage groups, other lenders, like I'm not surprised that you guys have built such a community around yourselves, because you guys promote what you say. Like whenever you say you have integrity, like you are honest, you have everything, you guys stand and live by that. And I see that in everyday business that you guys perform. So
thanks, man.
That's awesome.
Hey, that means a lot, dude. But Yeah, we live by our core values, right? Our core value, number one is honesty and integrity. It seems cliche. It's easier said than done, especially in a market where deals are a little bit harder to come by, right? So I've seen it all. You know what I mean? Like I've seen like fraud right in front of me, but that's not what we stand for. And can I make more money in that kind of route? Of course, but like that's not what we stand for. I want to build something that, you know, our friends and family, my kids are proud of. Right, I can go to sleep at night knowing that I've done it the right way, give them the right information to our partners, right? So thank you, man. It means a lot because like it's a little underrated and cliche saying, hey, we stand by honesty and integrity, but we do live and breathe by it. Our core values, like, you know, honesty and integrity is number one. Commitment to the community. Number two, we do a lot of charitable events, right?
Yeah, been a couple of those. Some for purposes.
Toys for Tots, stuff like that. So
yeah.
and then we try to support our partners' events too as well. And then so we have these pillars which is built on our core values. We hire and fire by that as well. And because like I think it's needed. It's needed. So.
You can walk the walk, but you can talk the talk, right?
It's tough, man. It's everyone wants to talk about it, about core values and mission statements and whatnot, and to be able to live it, but to have your staff live it as well, right? Because they are an extension of your business, right? My agents are an extension of my business, right? So like whatever has an empire stamp on it, I want to make sure it's just quality.
Everyone needs to be on the same. Everyone needs to be on the same mind thought, same plane.
Yeah, of course.
And so, like, they're an arm's extension of yourself, right? So.
100%, yeah, and like, I drill it into them though. Like, core values again. I gotta go, man. What are they?
Not core value Mondays.
These walls is up to me. Core values. I want you to stare at it, right?
Yeah.
But it means a lot, right? So like, and then so those are our three, right? So, you know, experts are what we do. You know, honesty, integrity, commitment to community. Another one is just simplifying the process. There's a lot of, you know, convoluted news and like misconceptions. A lot of moving parts, misinformation out there. So our goal is to simplify the whole thing. Give you the meat and potatoes, right? Simplify the whole process. How do we get you from point A to point B, right? So and then the last one is diversity and inclusion. So for us, it's like not only in race and gender, but also in ideation. You know, any ideas that we have within our brokerage, we try to bring to fruition, right? If it's a great idea, it needs to be heard. So that's kind of what we're building. Right? So,
I love that.
Thanks, man.
Yeah, that's great. Cool. Okay, well, so getting into kind of how you guys deal with your clients. So how do you guys exactly evaluate a client's financial situation and determine what mortgage products would be best for them?
Yeah, awesome, man. Yeah, like for us, it starts with our introduction call, right? And then it moves on to our strategy session. Right? The intro call is where we kind of try to get as much information as possible, right? So again, to get from point A to point B, that's the route we want to take. Information and documentation serves as a roadmap to get there. If we get a roadmap, it's easier to navigate through that process, right? So we ask a lot of questions. Rate's important, monthly payment is important, but at the end of the day, like, what are you comfortable with, right? It comes down to monthly payment. So when people ask us, like, what's the best interest rate, they really want to know, how can I get my payment the lowest and pay the little amount of interest possible?
And that's probably what on most people's mind. How can I pay this amount for this purchase I need to make?
When you look at an investment property, would you rather have a lower interest rate or a lower monthly payment?
Well, obviously a lower monthly payment.
It's amazing, yeah. So I think the misconception is that those two are the same thing. Yeah. Right? So for us, we're like, okay, if lower monthly payment is important, you guys have to trust it. This is the blueprint. You know what I mean? I've currently managed over 40 doors right now, so I've done it all. Like, I know what it takes to build a successful investment property. So for us, like, that's one area of it. Okay, so like, okay, bring the spouse in. What's your spouse comfort level is? You know, like, what's your risk tolerance? Like, you know what I mean? Like, if this happens, are you okay with it, right? So it is a pretty strenuous process, that first part. And like, you know, we went through it before. With your investment properties and future investment properties, right? It's intro call, but then one strategy session after another. And it's very property dependent, project dependent on the most part, right? So it's ever changing. rates are ever changing, right? So I think it's got constantly updated, and that's how we stay on top of our client's best interest.
No, that's awesome.
Yeah,
That's good. Good process. You guys always have exactly. There's a lot of moving parts that happen with it.
Yeah.
So a lot of moving parts, different properties, different strategies. So it's just putting all those different pieces together into one piece for that current moment in time, I guess.
Yeah,
right?
yeah. And for me, it's just having great support staff. Like our underwriters are, I believe, amongst the best in the province. So an underwriter is essentially someone who takes the file and will shop it around and put together the best package for you. So what I typically do is I'll take the intro call. I'll be, hey Doug, what's your risk tolerance? We'll get all that information. And I'll go to my underwriting team and say, guys, based on Doug's risk factors and what he wants out of this investment property, we should do this, this, and this. They go out, they find the best banks, they package it together, they get the approvals, they make sure that they're closed on time, right? So that's kind of like, it's a very important job, right? So they're on salary, and they can be mortgage brokers, licensed or not licensed, but they're on salary, on payroll. So they're on kind of a salary plus bonus structure. So they're there for you 24/7, but they also have incentives to help you close the deal, right? So it's powerful. And my underwriters, like Love and Patrick, when it comes to underwriting, Coco know more about the intricacies of a mortgage than I do.
Yep.
You know what I mean? Like for me, it's like I'll come up with a plan. I know a general idea of where we should be. But when it comes to, they're all analytical geniuses. They know every single line. Like, yo, hey Doug, your total debt to service ratio, which should be 42%, which means like, all your debts cannot be more than 42% of your income, right? But you're at 44. Okay, what else can we do? Do you have investment property where we can use the rent to add to income? Can you pay out your car loan? Whatever that is, they're really, really good at that, right? So that's how we're able to get so many clients approved, right? Because creative finance is our thing.
Yep.
Like we've seen it all. We've helped thousands of clients in the past, thousands of investors. So like we know every single angle.
Yep. Even when I have questions, for example, I've worked with Patrick before. I have a question that is a relatively simple question, but the answer he gives back, like it's a detailed question answer, and it's like you almost need no follow because he fills in all the blanks for you, and it's perfect. It's like, okay, thanks for that. That's what I need.
It's good to hear, right? You know what I mean? Like as an owner of a business, you always want to make sure that your colleagues are taking care of your partners. Right?
You said your debt to income ratio. What exactly is that, and how can someone better understand?
Yeah, so depending on what you're looking to do, right? Every bank or lender has policies on certain qualifying standards, right? So a typical one of a first-time home buyer buying a house for themselves is kind of 39, 42, right? So 42 being like I said again, 42% of your debts. Sorry, your debts cannot be more than 42% of your income. Right? That's very standard, very cookie cutter, right? But then for an investor in an alternative lending deal, maybe that TDS could be 50, 60.
A little higher.
We've got deals on 70, 70% TDS. So for you and I, on our principal resident, that might seem like, 70%, that's a terrible product to put in for a client. You mean their debt load is 70% of their income, how can they live? But in reality, actually, the upside of that, because they're gonna fix it up, they're gonna refinance it, they're gonna add units to the property, down the road, it's going to be 30, 40% TDS. But initially, to take advantage of that project, they need to get approved at 70.
Yep.
So we look long term. There has to be a plan and everything, right? If it's an A deal, if it's an alternative deal, if it's a private deal, whatever that is, construction financing, there has to be an exit plan on the other side for every single client. So TDS, GDS, those are just qualifying standards of every bank lender has.
Perfect. And just to dumb it down one little bit further, what's TDS and GDS?
Yeah. So it's a gross debt to service ratio and total debt to service ratio, right? So that's just the amount of debts that you have within your personal finances, credit cards, car loans. If you have, spousal payments, you have rental properties, we got to take into consideration the property taxes, the heat, utilities, mortgage payments of those properties.
Okay, cool. So for a new home buyer then, what would you suggest to a home buyer who's concerned about economic uncertainty and their ability to secure a mortgage?
To start the conversation, start the dialogue. right? If you're interested in investing in real estate, just start somewhere.
Yeah.
Ask questions. That's what we're here for.
Yep.
You know, ask questions. There's no such thing as a bad question to me. I'd rather you over ask than be in the dark and have uncertainty.
100%.
Right? So, and I think that's why our underwriters spend so much time on it.
One thing I like too is that you can try to do it by yourself, but don't reinvent the wheel. People have done it before you, so ask questions to follow the path
Love it.
that they've already done. So you don't have to start from scratch. You can start from their lessons and learn from those lessons.
Yeah, absolutely. That's a great point. Mortgage brokers, realtors, accountants, fellow investors, whoever that might be, ask a question.
Yeah.
How'd you get started? How you just show genuine curiosity. And like you'd be surprised, like so many people out there will know, including us, right? So how do we determine that, Doug? If it's suitable for them, is okay. Well, what do you want out of it? What's the what's the downside of this? Can you handle the downside? And then what's your outlook in the next 1 to 5 years, whatever that is, right? So and then from there we do a quick analysis. Well, like you want to make $200,000 on a flip. Or you want to put down $20,000 down. Like we have investors who are very unrealistic with expectations. They're like, guys, like it doesn't work that way, right? So, but if you're like, if you cross your T's, you dot your I's, and like, okay, this is within reason. Okay, let's move forward to the next step, and let's get your finances in place. So, first-time home buyers should reach out to us, just like whenever they're curious about home ownership. How do we get started? I'm very new, right? I'm like, it's amazing. We thrive on that. We thrive on hand-holding, walking a client through the whole process in a very slow, non-pushy, no obligation kind of way, right? Because we build our business all on trust and referrals, right? You won't see our face on a big billboard or a bus stop or whatnot, because we want to take care of you guys. Because if we take care of you, you're going to refer us to your friends and family because you guys want them to experience the same process, the same experience, right? We want that wow factor. We want to turn you guys into raving fans.
Yep.
Really. So reach out anytime. It's just even like, hey, I'm thinking about buying a property. I don't know where to start. That's a great question. Now let me tell you this. Come on in. We'll grab a coffee. Walk you through the whole process, and we'll try to simplify as much as possible for you. Right?
I love the quote, the raving fan, not to steer off a little bit, but it turns into, instead of they see us, we see you. So like you as a company, we see you. Like it's not just like as an ignorant blanket over everyone of just just everyone is kind of treated as a whole.
Yeah.
It's like we see you individually, and that's how you create your raving fans, by showing that care and generosity and just overall impact to that person, right? So
we try, and I think showing care and developing trust is how you build a sustainable business. Your business is built on that, Doug. So I think that's the only way that you build something that you're proud of and our children be proud of.
Yep. Appreciate it. Okay. Well, let's kind of get into a little different discussion then. Interest rates.
Cool. Yeah. Interest rates.
We've seen interest rates do some fun things in the last.
Fun or funky? Sorry.
Fun and funky. In the last little bit.
Yeah.
So can you briefly describe how that has impacted the mortgage industry, but also the misconceptions of how interest rates also affect mortgage rates?
Okay, cool. Yeah. So for us, like over the last 12 months, the Bank of Canada have increased interest rates by 425 basis points. Right? It's drastic. Yeah, so by 4.25%. That's so drastic. That's like unheard of, right? It's I think the most pessimistic person, economist in Canada, projected like 2.5 or 3 something like that percent, and we just surpassed that. It's such a rapid pace. I just think they fell behind early and they played a little catch up, and then so that's what they did, right? How has that impacted? Is it impacted home ownership, investors, ownership? Greatly. Cash flow is not even there. So for us, like the way we've been able to navigate through that is just through creative financing. Okay, we know that eventually rates are going to come back down, right? How do we structure a mortgage product for our investors or our principal resident homeowners to get you through these tough times, right? We don't want you to lose your house. We do everything possible for you not to lose your house, right? And it's sad because Canadians are losing their houses out there. investors are losing their properties, right? But like for us, it's like, how can we prolong that, knowing that there's light at the end of the tunnel and rates will start to come down, right? With the recent foundings, what's happening in the U.S., rates might come down earlier than expected. So spring is exciting. It's not just spring in the step when the nice weather comes out, and I think like rates are gonna start dropping, right? So which is like super exciting for a lot of Canadians. We're seeing Canadians coming up for renewal on like 199, 219, and going into 5-6%
big
interest
jump.
rates.
It's a big
right?
jump.
For us, like, the monthly payment's been increased by $500, $1,000, $2,000 a month depending on your mortgage amount.
Yeah.
That's a lot of money, right? So like, how can we navigate through that? How can we find different solutions so like you can live within your means, right? Yeah. And how has that affected the housing industry? I'm sure you can, like, how does it affect the housing industry?
We're down 35%.
And some municipalities even more, right? Yeah. So for us, like, I need to take a step back because we have potential homeowners saying like, I can't afford the monthly payment, right? But I'm like, I think that's also a myth out there, because if you're buying if you're looking at a $1 million property 2 years ago, right? That property is what now? 700, 750?
750, let's say
right?
750.
Just call it 25%, just to be 750. If you take it the high purchase price, low interest rate versus a lower purchase price, high interest rate, the payments are actually pretty similar,
almost balance, a couple
if
$100
not lower,
off, yeah.
right? So to me, I'm like, you're getting a heavy discount on the house you wanted 2 years ago.
Yeah, man.
For the same payment, right? And then what's going to happen when rates start to get lower, right? Affordability goes up.
Yep.
The market gets more competitive. It means like more firm offers. Yep. More firm offer equals house price is going to increase in value, yep. Right? So your property that you want for $1 million is now $750. When rates drop, house value is going to go up. You're building equity, and your monthly payment's getting lowered. It's a win-win scenario. Like, I think right now it's a great time to buy.
That's a great scenario.
But what the news and media sources telling us is that high interest rates it equals high payments, and that's kind of where we're stuck.
We're not going to get into what the media does, but they do fear monger a little bit, right? Yeah. Like,
we're here to bust some myths.
Yeah, exactly, right?
Yeah.
Okay. Now, the other part of that was saying about misconceptions about how the interest rates and mortgage rates are kind of are tied hand in hand. Now, maybe misconceptions is the wrong word, but we've noticed that when interest rates have gone up a little bit, we've actually seen a slight decrease in mortgage rates. So how does that happen?
Yeah, it's usually fixed or variable rates, right? Yeah. So a fixed rate is something that's constant through your term. You know exactly how much you're paying. Yeah. Variable rates is in correlation with the Bank of Canada rates, right? So it's just two separate kind of rates out there, right? So when the Bank of Canada makes a rate announcement, it's actually the overnight lending rate. Is really what the bank can borrow the money for, right? So usually that either discount or added premium goes on to the end consumer. So if you're in a variable rate, when variable rate fluctuates with Bank of Canada rates, that's when it's in correlation with interest rate hikes, right? Hikes and reductions. If you're in a fixed rate though, right, it's pretty fixed across the board, right? So when you're in a fixed rate, it's actually like the Bank of Canada overnight lending rate may or may not affect it. So right now, what we're seeing is that there's anticipation the rate's going to be dropping. So really, fixed rate has dropped in the last 3 days.
Based off anticipation.
Off anticipation.
Interesting.
We're trying to build into the market.
Right.
So really, right now, like if you're coming for renewal, we're locking clients in for like in the fours.
We haven't seen that for a while.
Yeah, we haven't seen that in like 8 months,
yeah.
Right? So, which is nice. It's nice. So like we're reaching out to all of our renewal clients, clients who are in the pipeline about to close. Like guys, we're getting heavy discounts right now in anticipation of rate drops, right? So that's how it kind of like it may or may not kind of correlate, right? So.
Awesome. So I guess we'll just dive into that a little bit. We'll segue into, we recently saw the Silicon Valley Bank closure. And that's kind of where you kind of get that excitement of seeing these rates come down. You mentioned that earlier in the little segment there. So what, in your opinion, is the big implications of the result of this bank collapsing?
Yeah, so we're it was been a crazy few days, crazy week now, I guess, right? But yeah, like it was the biggest bond-year drop since Black Monday, I think.
Right.
More than 2008, more than 9/11. It was pretty pretty substantial, right? So I you know, like you can read into it. Some say it's poor management and stuff like that, right? So but like they're not telling the whole story out there, but it's a super interesting read, super interesting follow, because it's fascinating that like this bank in like, you know, Silicon Valley is kind of affecting Canadians up here, right? But the bond yields, has always been in correlation with Canadian bond yields, right? So for us, yeah, like I think because the result of this, it's there is going to be like a quicker reduction in interest rates than we all anticipated. I hope that's true. So we'll see. The next April's the next Bank of Canada rate announcement.
Exactly. So we'll see what happens then.
The one thing that we've got to be mindful of that, and we'll segue into the OSFI policy proposals.
Yep.
It's OSFI policy proposals.
What is OSFI?
OSFI is the Office of the Superintendent of the Financial Institution.
Nailed it.
Right. So so tongue twister.
Yeah,
OSFI is really easy. Right? So the proposal is 3 different proposals on how to, you know, the Bank of Canada, they really, the governing body, they just want to maintain a stable real estate market. Okay, so they believe that by limiting exposure to debt, that's how they destabilize our kind of real estate market, right? So 3 proposed rule changes in consultation till mid-April. So I think like 1 or if not 2 of them at least will be in place. One kind of contradicts the other 2, so we'll see what. But it's essentially going to be like just the ability for potential buyers to access to financing is limited, right? By how much we don't know yet, so that's why it's still in consultation. But so I think that beginning of April, lots of excitement, interest rates lowers, and then OSFI puts it kind
hammers
of
down a little bit.
Kind of questionable again, but like I think it's gonna be a good spring market.
Little Batman reference there, eh? An unstoppable object with an immovable force. Eh?
Exactly. Yeah. Right. So yeah, that's a good one. But so I think like I'm excited to see what happens in April.
Yeah.
Right. So.
And on my end too, being in real estate, obviously. The spring market normally picks up a little bit more action, a little bit more traction in the market. And we've already seen a little bit more traction already with the bank already pausing on their interest rate hikes.
Yeah.
Just even this month alone, we've seen buyer activity pick up. We've seen multiple offers kick back in on a lot of properties. So if they're planning on reducing interest rates further in the springtime, it's going to bring that buyer demand back. It's going to bring people kind of out of the woodwork saying, like, hey, there is now more affordable to the market. It's going to start flooding the market a little bit. Yeah. And then you're going to get that, because of that buyer demand, prices are going to start going up again. That in my opinion, anyways, that's how I see it's going to react if we follow that direction.
Absolutely. Yeah. I agree. 100%. I agree. Yeah. That's good points. Like, kind of like I said earlier, right? It's it just feels like it's a perfect storm. Yeah. But then like OSFI, bang, hammer,
bam,
stops it. So.
Awesome stuff. Okay, so getting back to your group itself, the Empire Mortgage Group, what type of goals do you guys have for the future, and how do you plan to achieve them?
Man, lots of planning. You know, I mean, I'm always planning. I'm always looking ahead, kind of see how can we become better. Yeah. So I think it starts with a new office space coming this summer. Oh, nice. It's gonna be a dynamic office space where, like, we're proud of this office space, but
still in Hamilton.
It's still in Hamilton, and like there's a few things we want to change. We want to make it more open concept. We want to be inviting. We want to be, hey, Doug, come. Let's go for a coffee. Hey, where do you want to go? Just come by the office. Yeah. And it's nice, right? So a place where, you know.
Or a tea.
Yeah, or a tea, yeah. Yeah. So for us, it's like somewhere we can just, I'm proud of, our agents are proud of, and like it's a work environment. In a world where everyone's going more virtual and like remote, I want a place where I want to go to work. It's cool to go to work. It's inviting, it's warm. We're going to do a lot of amazing events out of the space. We're still going to be downtown, but with maybe a little bit better parking would be nice.
Yes.
Better access to, you know, the 403 and the link would be nice, right? So that's kind of natural growth for us. Like everyone's going virtual remote, but I've always been like a collaborative leader. Like, I've helped started the co-working movement in Hamilton. I believe in collaboration, sharing what works, not hiding your secret sauce. It's kind of always been the goal to where it got me where I am today, right? So, and then just keep bringing on good people. You know what I mean? We're growing at a very organic pace, and I love it. We don't bring on agents or staff unless it's a recommendation from a close family, friend, or partner, right? So we stay very true to that. And if you don't abide by our core values, we'll let you go. It's kind of black and white with core values, and that's why it's so important to have core values and mission statements in every company.
And that just comes full circle, right?
Yeah, doing the right way.
Perfect.
Or you're gone.
Yeah, you're right. Yeah. Okay, great. So, I guess last question is, how can a home buyer get in touch with you if they're interested to secure a mortgage?
Awesome. Yeah, reach out to us. info@empiremortgagegroup.ca. We're on Facebook, we're on Instagram, LinkedIn. Reach out to us. Either myself or one of our expert underwriters. We're more than happy to start an intro call, a little lead test strategy session for you.
Beautiful. And what's the phone number they can reach you at?
905-531-7399 is my direct line. You're only getting it because you're on Doug's channel right now. You're following him. I don't give that number out to many people. I'm trying to not give it out to anybody at all, but yeah, reach me anytime.
There you go, guys. Well, Kevin, I appreciate that. That was a lot of information, a lot of solid information. Answers a lot of questions I'm sure a lot of people have. So I appreciate it. Appreciate your time.
Thanks for having me, buddy. Always a pleasure, man.
Yeah. See you at the gym.
Absolutely.
Second time, right?
Yeah, second time.
Yeah.
Sweet.
Yeah.
That's a wrap.
There you go. Cut.